Hello everyone and welcome to Day Trader S&P 500. Today is Monday, January 10th, 2022. This is Dale Woodson, editor of Woodson Wave Report. We're well on the way to recovery from COVID here. Actually have virtually all of the voice back, so we can do a video. I thought about doing a silent one, but we decided not to and just wait for the voice to come back. So want to look at a big picture first, if you guys don't mind. Let's go ahead and pull up that pick if we can. Let's go right back here, okay? Since the 2009 low, I've been looking for, at the time, was looking for a move up Fibonacci 3 years later in 2012, or 9 years later in 18, or 13 years later in 2022. So back on January of 2018, back here, we wrote, and I'll show you guys a newsletter, any sustained moves to new all-time highs later this year, that's 2018, would move us to a long position on the short, intermediate, and long term, as the next Fibonacci multiple for this advance from the 2009 low gives us a target of 13 years or the year 2022 for a high. But the market gave us both. In 2018, that's January of 18, we had a wave 3 high and we had a fourth wave correction, albeit an expanding triangle, into the pandemic low here, which was a 4 of this degree, and then bang, here's 5 right here. I was thinking it might be 1 of 5, but I'm almost sure this is 5 of 5. But anyway, the market accommodated both the turn dates on 2018 and it appears on 2022. Either we got the high on January 4th, or we will get it on the 14th, or at the latest in March. But those are the turn dates, and here is the Fibonacci retracement levels for that 5-wave advance from the 2009 low to the 13-year bull market that is ending or ended in the year 2022. You can see we have 32.31, 27.41, and 22.51. If I can show you guys that, give me a second here. See if I have that. Yeah, here is that 2018 January report. Let me make sure that's it. Yep, there it is there. And you can see that's what we called for back here. Those same words. We're reflecting back in the year 2000 when the market topped in January, and saying that here it is right here. All-time highs move us to a long position in the short, intermediate, and long term. Next Fibonacci multiple from the 2009 low gives us a target of 13 years or the year 2022 for a high. Okay, so let's fast forward to this morning. We did a pre-market open report for our monthly subscribers. Here it is here. Okay, let's see what we got here. Yeah, pre-market open January 10. We're looking at ES minis, and there's our targets right there. This is before the market opened, maybe an hour and a half before the open, and here's we're looking at 46.29 and 45.83. And the market just about hit on our targets. Let me see. I think I have another report that we put out today. Do I have that midday alert? Yeah, there it is. I left that up there, but that gave the then we gave the upside targets for the move up from that low in the E-minis. Okay, it went down and hit 45.72, little overshoot on our 45.83 target by about 11 points, but it was a good move and it was a good tradable move there. Okay, so our customers, our monthly subscribers to our newsletter, are getting this information in advance. You can see there's our subscription services there. We also have our disclaimer and our awards over the years there. And we also want to thank you guys for subscribing to the channel. Hit the reminder bell, and don't forget the like button, which didn't show up, but never fear, we have a picture of it here. It is right there. Excuse me, looks something like that. Still not 100% over COVID, but very well recovering now. Okay, so let's get let's see what we have here next. Let me get out of that. Let's get over here. I'm going to look at the futures first, okay? The futures are leading the cash market, as they should, because they're the futures. You can see the expanding triangle here, A, B, C, D, E. Let's put some numbers up here. I'm going to throw 1 and 2 out of the way. 1, 2, 3, 4, and 5. Okay, let's make that a larger degree of trend, make it at least minor. There we go. So there's the expanding triangle. Ignore the 1 and 2. There's 3. Excuse me. There is 4, and there is 5. Okay, so while the futures are going down because they already put in a 5 and already did the expanding triangle, and they're doing down in A wave, it's first 5 waves down, while the cash is putting in the E wave. Okay, let's get into the cash and see what we have here. Okay, here's the E wave coming down, okay, and there is the expanding triangle in the cash market in the S&P. You have an A, B, C, D, and here was that make or break 47.31. If you'll recall, we had a 1 up, a 2 down, 3 equaled 1 up here, and 4 could not go below the wave 1 high. It did, so it broke the bull count right there. Otherwise, it could be a series of 1s and 2s, where this is a 1 up, this is a 2 down, this is a 1 up, and this is a 2 down, and that will be broken with a move below this 45.30 low. So there's still a slight chance that it's a series of 1s and 2 in a bullish wave count, but it's running out of room and time. So we expect a wave E down. There's our target prices and our target dates, and so far so good. It looks like we have 5 waves down. This looks like it could have one more wave in this 5th wave, or it could be a 3rd wave extending with a 1, 2, 1, 2, 3. Okay, so we'll have to see how that that plays out there. Okay, let's see what else we have here. We have that. We have this. I think we may have just covered everything, believe it or not. We did that. Just showed you guys this. Okay, yeah, we had that. That was our futures where we nailed it this morning. This is the bigger picture here, and this is the same picture here with our targets. So yeah, before I run out of voice or cough too much on you guys, let's call it even right there. Let's have a look here at the grand picture in the cash and then the futures. Okay, and let's look at this a minute. 1, 2, 3, 4, and then see, I got a 1, 2, 3, and that can't be a 4 because it went too high. That was quite a move up. But if that is 5 waves down, let's look at the retracement targets for that while we're here. Okay, let's do that. Look at that, right on the 382 at 46.62, 46.90, and 47.18. That is in the ES, the E-minis. Let's look at the cash market, and let's see what we have here. Let's get this out of the way. We don't need to see this anymore because we already know it's broken. So let's move that out of the way. And let's see here. Got an hourly chart. Let's see what we have for a retracement of this. Fibonacci retracement. Get as close to that as we can. And that's sitting right on the 382. So the cash market is 46.73, 47.01, and 47.29. Yeah, this still looks like 1, 2, and then 1, 2, 3, 4. Yeah, that we could still get another wave down in this move right here. This still could be a 1, 2, and a 1, 2, 3. It could, and that is right up against that one low. What is that? What is that low right there? 46.71, and this is 46.73. So that went too high. So there you go. All right, there's our Fibonacci retracement levels in the cash market. Don't forget all important turn date down here. Obviously, it could end up here, but unless and until that's broken, which is getting pretty far away now, that 48.18, we're looking for this thing to come down in wave E by the end of the week or Tuesday. Remember, Monday's a holiday. Okay, thanks again, everyone. Until next time, take care, everyone.